Good morning, I'm Maiki Oreta, and you're watching Basis Points, where we dive deep into the numbers and the stories that drive our economy and shape our world. The headlines. Now, the Philippines is calling for increased financial support for countries most at risk from climate change as it participates in the COP29 summit in Azerbaijan. Goldman Sachs upgrades Philippine stocks to overweight. We'll talk about this, the stock market, and more with the Director of Research at China Bank, Rustin Mercado. Digiplus Interactive clarifies plans to acquire Casinoplus following reports that the deal could transform the Philippine online gaming sector. Brazilian President Luis Ignacio Lula da Silva is advocating for a 2% wealth tax on the super rich at the G20 summit in Rio de Janeiro. First, let's take a look at the financial markets. On Wall Street, the S&P 500 and the tech-heavy Nasdaq closed higher ahead of the quarterly earnings report of chipmaker NVIDIA. That report is due out Wednesday, U.S. time. Investors are eagerly assessing the demand for chips and the sustainability of the AI euphoria that has driven much of the market's rally this year.
Huge bull run, obviously, this year to date. We're basically flat or a little up since the election. Maybe the market got a little bit ahead of itself, but there are some names that have just done excellent since the election. Tesla, Bitcoin, some high flyers, some interesting news on Waymo that came out today. They're looking to expand into Austin, a couple other cities. So you kind of have some haves and have-nots between who was involved in the election, specifically Musk-related stocks and some huge stocks like that. And then, I think the market's ready to start digesting earnings season here for Q3 going into the end of the year. But we're up 25% year to date. We can't complain the stock market-wise. And so, maybe we got a little bit of ahead of ourselves the few days after the election. And I think people are almost ready to start eating turkey here.
European markets closed mixed as traders await key regional data points this week, including the latest inflation numbers from the UK and the Eurozone. Here in the Asia-Pacific, markets open higher, tracking Wall Street's gains. Investors are also looking ahead to key comments from Chinese financial policymakers at an investment summit in Hong Kong. Over in the commodities market, the Brent crude is trading at $73 per barrel, while gold is at more than $2,600 per troy ounce. We turn now to the COP29 summit in Baku, Azerbaijan, where the Philippines is urging for increased financial support for countries most vulnerable to climate change. The Department of Finance is calling for developed nations to pledge $1.3 trillion annually to fund critical needs in areas like climate adaptation, mitigation, and loss and damage. The DOF also demands the removal of barriers to climate finance, including high capital costs, currency risks, and heavy debt burdens that are limiting access to essential resources. The DOF is calling for climate justice, stating that countries least responsible for the crises are paying the heaviest price. As the summit enters its final week, countries are at a deadlock over a new financing goal. The UN climate chief is urging delegates to take swift and decisive action on this crucial issue.
We'll only get the job done if parties are prepared to step forward in parallel, bringing us closer to common ground. Bluffing, brinksmanship, and premeditated playbooks burn up precious time and run down the goodwill needed for an ambitious package. So let's cut the theatrics and get down to real business.
Billionaire Han Si drops 142 million pesos on additional shares of China Bank Corporation. The CBC chairman recently snagged a total of 2.5 million shares at 57 pesos each. He now has a total of 10.38 million shares worth 582 million pesos in China Bank. This move comes as the bank's stock hit an all-time high of 61.40 last month, up 82% this year alone. Dito Holdings, the telecom company owned by businessman Dennis Uy, prices its follow-on offering of shares at just over 1 peso each. Now, the price is more than half of the company's initial maximum indicative price of 2 pesos and 15 centavos per share. If all shares are sold, the offer could raise around 2 billion pesos. The offer period will run from November 20th to the 26th. This was originally set for late September, but was postponed to allow investors more time to evaluate the opportunity amid the current market conditions. Digiplus Interactive is clarifying reports about its supposed plan to acquire Casinoplus. Earlier, Bilyonaryo.com reported that the two companies were set to strike a deal that could potentially transform the Philippine online gaming sector. If the buyout were to go through, the combined companies would have a monthly revenue of approximately 10 billion pesos. However, Digiplus says that while acquisitions have always been a part of their strategic plan, there are no final decisions or commitments at this time. Now on to some earnings reports, starting off with Shang Properties of billionaire Robert Kwok. For the first 9 months of the year, the real estate developer saw a 13% net income to 4.2 billion pesos, a 13% rise in net income to 4.2 billion pesos. This was fueled by strong sales of residential condominiums and steady growth in its leasing and hotel operations. Total revenue rose 1.1 billion pesos to 8.14 billion pesos. Shang Properties hopes to sustain its growth trajectory with the launch of Shang Summit in the third quarter. Alson's Consolidated Resources, a member of the Alcantara Group, reports double-digit growth in profits. Net income for the first 9 months increased 20% to 604 million pesos, even as gross revenues declined from 10 billion pesos to 8.9 billion pesos. For the third quarter alone, net income rose 38% to 824 million pesos, while revenues remained virtually flat at 3 billion pesos. The company attributes these strong results to stronger demand for electricity in Mindanao. ACR has also been expanding its retail supply portfolio and advancing its renewable energy projects, including the recent completion of its first hydropower project in Sarangani. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line. Welcome back to Basis Points. Trading at the Philippine Stock Exchange opened just a few minutes ago. Let's take a look at the initial figures. Right now, at 9:41 this morning, the PSEi index is in the green slightly, up by 0.1% to 67.69. So the bounce back we saw from 4 weeks of selling that began last Friday, it's continuing to this day, albeit modestly. We're back at the 6,700 level since yesterday at 67.69 right now. All shares index up as well, up by 0.1% to 38.04. Out of all the sub-indices, only the financials is in the red, down by 0.3%, while the industrials, holding firms, services, mining and oil, and property counters are in the green. Now, the foreign exchange market, the peso opened unchanged against the US dollar. It opened at 58.65 compared to its previous close of 58.68. Now, to help us make sense of these numbers, we're now joined on the line by the Director of China Bank Securities, the Director of Research of China Bank Securities, Rustine Mercado. Hi, Rustine, and welcome to Basis Points.
Hi, Maggie. Good morning. Thanks for having me.
Okay. Now, Rustine, there are a lot of uncertainties, but one thing is for sure, Trump 2.0. So for this interview, let's talk about the market. I know you can only talk about stocks, so let's talk about the stock market in the context of another Trump presidency. Now, we're going to be flashing on the screen some companies. These are the best performing stocks and the worst performing stocks year to date. Now, topping the list of the best performers, we've got Converge. That's up 90.45% year to date. ICTSI up 54.94% year to date. MBT 43.54% 57% year to date. Basically, Converge, ICTSI, MBT, Century Pacific, and BPI are the top performing stocks so far for 2024. Do you think they'll be the top performing stocks coming into 2025?
And certainly, I think that a lot of these names are industries that could be resilient relative to what could happen in terms of prospective impact on the inflation outlook and policy rate outlook of the U.S. Fed in the context of the Trump presidency, right? So I think banking is one that could be a little bit more resilient. Converge as well in the telco space. Definitely, we think that could be a little bit more resilient as well. I think overall, these names have performed really well because they, like, for example, Converge has come out from a very low base, right? So I guess this also comes to show that if you're coming from a low base with very low expectations, then if you just perform much better and then you actually exceed expectations, then you have the propensity to run up that high. So hopefully we see that continuing in 2025.
Now, in the context of a Trump presidency, what are the stocks that stand to lose given his protectionist policies? Right now, if we look at the worst performing stocks to date, that's Nickel Asia. That stock is down by 41.97%, followed by JG Summit Holdings down 41.68%, Bloomberry down 37.91%, URC down 29.48%, Wilcon down 28.90%, and Aboitiz Equity Ventures down 23.32%. Now, these are the stocks that have performed not so well in 2024. But what are the stocks that are seen to get hurt from Trump 2.0?
Well, I think if you're looking at these names, obviously, if you look at Nickel Asia, for example, one of the reasons why it was weak was because of, obviously, it's very tied to the commodity price of nickel prices, right? So China, what happens in China is a part of that. Largely because nickel is an industrial metal, so it's one of their base metals. So if you're seeing some if we're anticipating a weakness in China still, then that could the recovery in nickel could be a little bit more restrained. But I think generally, if you're looking at what the impact of a Trump 2.0 presidency really is, and the main risk for the market and investors right now is that there seems to be some consensus that his policies could upend the inflation outlook and obviously, consequentially, what that means for interest rates, right? So I think markets have been trying to press it in terms of lower rate cuts. So I think from the Fed, markets were pricing in around 100 basis points worth of cuts through the end of the first half of next year. I think that's now down to around 75 to 50 basis points. So I think overall that hits everybody kind of equally. There's just some that could pull a little bit ahead or be a little bit more resilient when it comes to that change in expectation. So I think definitely there's a little bit more visibility on who could be more insulated rather than those that could specifically be at a disadvantage. Obviously, those with export exposures that are more direct to the US could be one of the most that could be impacted.
In terms of pricing things in a changing environment, we're coming off 2 years of relentless, tight monetary policy from an over 17-year high of 6.5% to rein in inflation. It's a very different environment now. Bank of America says that the Philippines, along with Indonesia and Thailand, have the latitude to reduce monetary policy even further. Bank of America says the BSP is seen to be making 25 basis point cuts every quarter starting in Q4 2004 until Q3 2005 for a cumulative cut of 100 basis points for 12 months. Is this in line with your own views, or and where do you see these cumulative cuts taking the PSE index?
Okay, so I think first off, market expectations are aligned with that. I think markets are expecting around 100 basis points worth of cuts in the tail end of next year. Could be a little bit less depending on how that inflation outlook moves. But again, I think that's what markets are trying to price in. And that's certainly what's been driving caution, right? Also, obviously, we're kind of conscious as to how the policy uncertainty will make the Fed, or how the Fed will move relative to that uncertainty, right? We're expecting the Fed to remain data-driven. So at least through the first half of next year, you see some clarity as to the pace of cutting rates, but then it becomes a little bit more fuzzy towards the tail end of next year, right? So in that sense, for us in the Philippines, right, we've seen that sell-off, which is mostly been spurred by the aggressive foreign selling that we've been seeing actually over the past 2 weeks, right? So I think they're trying to just get out, and I think that the sense is get out now and then assess later, right? So at this point, we've sold off over 700, 800 points. We're kind of assessing, right, what the impact is. So definitely, it's still good that we're seeing lower policy rates heading into next year. That will spur consumption and business capex. While, of course, what happened or the policy uncertainties could scale back those existing expectations, it shouldn't completely derail them, right? So that's still a cause for optimism on our part that the index should push higher still into next year, even if we're seeing some weakness over the past few weeks.
Yeah, I think you hit it on the nail, Rustine, when you said that things are going to get a little fuzzy at the tail end of next year when Trump's policies actually kick in. But in the meantime, you also talked about consumption. So I wanted to ask about the impact of Q3 earnings on market sentiment and performance. Q3 data has been coming in, some hits, some misses. Generally speaking, what are your thoughts on Q3 earnings thus far? And what does it tell you, most importantly, what does it tell you about consumption spending?
Okay, so the third quarter was, I think that's a little bit more restrained in terms of optimism compared to second quarter, right? And I think the third quarter captures some bits of an inflection point with respect to consumption. We were hoping to see stronger, or at least a sense of a rebound, but obviously that didn't happen on the balance of things. But obviously there are some green shoots, and we are monitoring that, especially as we head into the coming year, where the outlook for growth is a lot more upbeat. You have inflation remaining stable through the end of next year, at least that's what markets expect, right? And that should be supportive for consumption. And why is that? They actually regain some of their purchasing power, so there's also a little bit less incentive to save as interest rates come down. So hopefully that translates into consumption spending and hopefully fueling the profits of our companies, especially those in the consumer staple space, right? One thing that's kind of underpinning our optimism as well is that we observe that consumer companies have tended to do better in periods where inflation was stable, rather than when inflation was on a downtrend. And given that the expectation right now is that inflation will remain stable within the 2 to 4% target of the BSP, then hopefully we see that. And again, that's coming off of a pretty low base given the drag that inflation's been kind of putting on our consumers this year.
Yeah, stability is what everybody needs so that they can all plan accordingly. So one last quick question before I let you go, Rustine. Year-end target for the PSE index?
Okay, so in terms of the year-end target, we think that what happens in the next 2 weeks is going to be important, right? Since we're nearly there, right? So if we're able to kind of hit resistance at around 6,800 and then we just hold above 6,700, then definitely we think that 7,100 would be at least where we'll be, or we can reach that cap of the year. If we're able to move higher than that, I think the best we can do is just go back to around 7,500. Again, that's a tall order, but if the market has come down the way that it did because of uncertainty and people steering clear of that, then if there's a little bit more clarity and we kind of think that, okay, maybe it's a little bit overdone, then definitely we can kind of claw our way back to those levels. And hopefully that is something that's in our books in the next 6-7 weeks.
Yeah, it's always a complex web of things that are going to be influencing the market. Thank you, Rustine Mercado, for sharing your thoughts on the stock market with us.
Thank you for having me, and have a great week ahead.
And that was Rustine Mercado, the Director of Research for China Bank Securities. Now, an update from the ongoing G20 summit in Rio de Janeiro. Brazilian President Luiz Inácio Lula da Silva is calling for international tax cooperation to combat inequality. Lula is once again pushing for a 2% wealth tax on the assets of the super rich. He argues that this could generate around $250 billion annually, funds that could be used to address both social and environmental challenges.
For the crisis of multilateralism, more multilateralism is needed. There is no need to wait for a new world war or an economic collapse to promote the transformations that the international order needs.
The leaders of the world's 20 major economies are also being urged to play their part in combating the climate crisis. This call comes from the president of the ongoing COP29 summit in Baku, Azerbaijan. While the summit is tasked with establishing a new goal for climate finance, it's the G20 nations that control the funding.
Their leadership is essential to making progress on all pillars of the Paris Agreement, from finance to mitigation and adaptation. We cannot succeed without them, and the world is waiting to hear from them. We urge them to use the G20 meeting to send a positive signal of their commitment to addressing the climate crisis. We want them to provide clear mandates to deliver at COP29. This is their chance to show their leadership.
And that's it for Basis Points. I'm Maiki Oreta. We'll be back tomorrow for more news on the financial markets and more. Keep it here on BNC, the Bilyonaryo news channel, always on top.